Hello everybody and welcome to the latest in our Urban Living webinar series. Today we are going to be discussing a very hot topic, ESG investing and its impact on the hospitality and accommodation end of the real estate sector. It's such a hot topic that in the last 2 years ESG funds have attracted $340 billion worth of investment, and we've even seen just this week Bitcoin's value crash because Elon Musk questioned the ESG credentials of Bitcoin. So even its seemingly unstoppable rise has halted because of ESG. Now this session is one in a series, which is a precursor to a live event which we're launching in July in London at Tobacco Dock. It's called Urban Living Festival. It's themed across three stages: live, stay and work. And it's really looking at how the hospitality and real estate asset classes are beginning to overlap and merge. You can find more details about the event in the chat. Now, today's webinar will last around an hour. We'll have 45 minutes or so of panel discussion, and we'd like it to be as interactive as possible. So you can submit questions using either the chat or the Q&A function in Zoom. If you can keep yourself muted if you're not one of our panelists, that would be great. And everybody who's registered will receive a recording of the session via email in the next couple of days. Now, this webinar series is sponsored by Res Harmonics. And before we get down to the nitty-gritty, we're just going to watch a short video to find out a bit more about Res.
Res Harmonics is 100% dedicated to service departments and co-living, bringing together all the tools you need to drive performance and deliver a great guest experience. From channel management and direct bookings to finance, housekeeping, maintenance and customer journey automation, whether centrally or on the move, the platform consolidates all information into one system, saving you time, improving communication and maximising business performance.
So thank you to Res Harmonics for sponsoring. You can see their contact details also in the chat if you'd like to carry on a conversation with them. Just going to show a couple of slides to give today's conversation some context. Now, the first quote here is from Lawrence Fink, the CEO of BlackRock, who I believe are the biggest investment company in the world. And he recently said, over the course of 2020, we've seen how purposeful companies with better environmental, social and governance scores have outperformed their peers. Manjit from S&P's ESG research and data said, last year the topic of social and racial injustice, which had been around for a long time, was maybe not on investors' minds, but now it's certainly taken center stage in terms of how society and stakeholders look at it. The standards we use to measure whether companies are doing a good job or a bad job have certainly increased over time. And then David Levitt from the Commercial Observer says, poor ESG performance will catch up to a company in the long run. Sooner or later it will pay a high price in terms of insurance premiums or class action settlements if it ignores its environmental or social governance responsibilities, even if its financial results look good. Not everybody is convinced, however. Sunny Kapoor says, most ESG investing is little more than a marketing trick. The message is not ignore ESG, but rather do not buy the narrative of ESG outperformance. And Tariq Fancy, who was former head of sustainable investing, again at BlackRock, disagrees with his former boss. He says ESG creates a giant societal placebo where we think that we're making progress even though we're not. If we want to talk specifically about the hospitality and real estate sectors, Gregory Orton says, hotel owners, operators, brands and management companies have a vested interest in the sustainability of their properties, which are developed and operated on sustainable principles in order to keep operational costs low, meet guest demand and protect brand reputation. James Lamb from Movenpick says, clearly trying to use less water and fewer towels and trying to throw less food away. These things serve a double purpose, which is the less waste you have, the more efficient your operation and the more profitable you are. But he also talks about the social side of the business. They've seen an increase in employee engagement, which is another key aspect to ESG. And then Susan Bland of RBH, who's one of our panelists today, Susan says, our successes as a management company are attributable to our people, our community, and our environment. Therefore, it's our responsibility to make sure we look after each of these to the best of our ability. And then just touching on some other asset classes, Richard Jackson, the founding partner of Apache Capital, which funds Mode of Living, a BTR operator amongst others. He says, increasingly investors are saying they will not put their money into vehicles that back projects harmful to our environment. This is becoming more than just a fashion for a small minority. It is and should be the new normal. And just today, I read that Apache Capital has launched a new initiative called Present Made, the UK's first branded, purpose-built, single-family build-to-rent platform. And Apache is promising an ESG-led development agenda to include biophilic designs, amenities and services intended to help promote mental and physical health and well-being, and where living sustainably is second nature. And just the last slide, a couple of other asset classes. So ESP is a student accommodation provider, and their founder Tim Attlee says the happiness, well-being and good mental, physical and emotional health of our residents is paramount. And then this last quote of all, I thought was a really interesting one from Rachel Gutter, the president of the International Well Building Institute. She says, our physical and social environments have a greater impact on our state of health than our lifestyle and behaviours, our access to healthcare, or even our genetics. Given that we spend more than 90% of our time indoors, those environments have a profound impact on our health and well-being. There's no choice to be made between planetary health and human health. At scale, the two are inextricable. So as you can see, we've got a lot to talk about today. So I'm going to crack on. My name is George Sell. I'm the editor-in-chief for International Hospitality Media. We are an online B2B publisher for the hospitality industry and an event organizer. And joining me today, I've got a fantastic panel of experts. I'm going to ask them all to introduce themselves from left to right on the slide. So Susan, welcome to you. Would you like to go first, please?
Hi, good afternoon, everybody. My name is Susan Bland. As you can see, I am Managing Director of RBH Hospitality Management. We are a company that manages hotels on behalf of a variety of owners. We work with about 26 different owners across our full portfolio. I have 40 plus hotels we have across the UK, and our owners could be some individual people who have invested in a hotel down the road for their pension and want to pass it on to their family, or it could be a great fund, an investment fund who are looking to invest in portfolios, etc., and everything in between. We have lots of a variety in what our owners are looking for from our operation and from getting out of their investments.
Thanks, Susan. Natalia, over to you.
Hello, everyone. So I am Natalia Kolotneva. I represent the institutions today. I have a voice of institutional capital funds, whatever you want to call it. So LaSalle is, I'm sure loads of you know, our global investment manager. We run, and I think we'll hold about just over 70 billion of assets under management. But my role particularly is driving, sort of leading the specialist asset managers in the UK, focusing on operational real estate and anything that has a bad living asset class. We have just around 14,000 beds in PBSA, build to rent, residential housing, healthcare, hospitality. So quite big exposure across various sectors.
Thanks, Natalia. Ben, over to you.
Hi guys, yeah. So I'm Ben Channon. I trained as an architect. However, I've now gone on to specialise in healthy buildings, how we can design healthier buildings for both physical health and mental health. In my sort of previous life as an architect, I worked actually with developers similar to Apache, with various interest and focus on creating healthier places, more sustainable places. So that's kind of in my background. But yeah, I moved to Ekkist at the end of last year so that I could really pursue that passion of creating healthier places. And for me, it's that quote from Rachel Gutter there was key, that when we're designing buildings, we absolutely have a massive responsibility to think about both the physical impact and the mental impact that they're going to have on the people who use them. And that falls massively under the ESG strategies and the things that people need to be thinking about when they're creating any kind of new buildings. Thanks, Ben.
I'm hoping Zoe is there. I know she had connection issues a little while ago. Zoe, are you there?
I hope I'm here.
Yes, you are. Wonderful.
I mean, it's a bit of an existential question, isn't it? I apologies. Right at the moment at which we were supposed to start, Oxford decided now's the time for an electrical storm. So I will be with you for as long as the weather allows me. So my name is Zoë Berman. I am the founder of an organisation called Part W, which is an action group which campaigns for gender equity within the built environment. We're a voluntary organisation, and we have two strands of work that we quite big strands where we look to campaign, which is the campaigning for gender equity and intersectional equity within the professions within the built environment sector, in terms of ways of working and the systems of delivering buildings as teams. And so that's the more kind of the human side in terms of within work, and then also working within and sort of looking to draw more attention and make more visible and raise awareness around the need to be thinking much more equitably in how we design. So that's the sort of almost like the HR side, and then also the realized project side. I am a qualified architect and I'm a director of my own small design studio, but it's more the Part W side that I'll be talking about today.
Thanks, Zoe, and apologies if I made the session sound a bit like a seance briefly by asking if you were there. So welcome everybody. If you would like to connect with our speakers on LinkedIn, you can see in the chat there, you can see all their profiles. So please do carry on the conversation after the session. Okay, so let's get stuck in. Natalia, I'm going to ask you to do the heavy lifting for the first bit of the session as our representative from the investment community. So I think it's fair to say that most people have an idea what ESG investing is, but probably not too strong on the details. So what does it actually mean in practice, and what questions and research do funds do before making an investment decision for an ESG fund?
God, it's going to take me more than 5 minutes to talk about this, a full hour. Well, I think it's just go back to the basics. I think, if we look back in what happened in the last 10 years, the responsible investing and the ESG has evolved rapidly. And what before ESG sort of issues been in the sidelines, it came to the forefront of all this sort of decision making for asset managers and investment managers. It's very important to look at the ESG approach is very much based on proposition that investors can do and improve the better future for the generations, for the planet, for the buildings, and not sacrificing at the same time their financial returns. And, we used to get questions from investors, 10 years ago saying, well, what is your ESG policy? Do you have one? What does it look like? Now it's so evolved now, almost moved on from what is ESG is like. What is your net zero carbon pathway looks like? What is your social value proposition? And, we are embedding it into our business model, into our policies, not just investment process and the asset life cycle itself. So if anyone is asking, what is actually ESG, what does that mean? I think it's the value creation over the long term. Again, this is quite personal, but when I think about what ESG is, and implicitly it's thinking about how do I protect, enhance the value in the long term. So, it's quite hard to implement ESG parameters if you just have that short-term horizon. So it's, I think sustainability and commercial performance is very much synonymous at the moment. You're asking me how do we do our screening? For us, data, very much having a clear framework of how do we approach ESG. It's not just the E, because I think environmental side is more or less quite transparent and, you know, talked about it. It's the S and G. You know, I wouldn't say that we're expecting our consultants, develop, you know, contractors, agents, everyone. I mean, sort of to show me what your gender policy looks like, what your, you know, what's your equitable, you know, commitment to the workforce. But I'll say that we're very much looking for alignment of interest with whoever we work. So I think it's, for me, collaboration, alignment, it's very much a priority. I can go further, George, if you want, but there's a lot to talk about.
It is. Well, actually, one thing that you said there really interested me, actually. Do you think that the prevalence of and the importance of ESG now is resulting in investors holding onto assets and positions for longer than they would normally or previously?
I think it's, well, I think it's, we have to price in the risk, you know, whether it's climate change, whether it's, you know, responsible consumption. We talk, you know, I've talked about the framework at LaSalle. You know, we look at 4 pillars, which is, you know, climate change, responsible consumption, biodiversity, rewilding, and social value. I think as long as you're clear about how your asset from your investment stage, or maybe design, investment and management stage and operational stage, you are addressing this, you know, for us, goals out, you know what your outcomes are, what your data is looking like. I think, of course, you know, for us, it's very much, you know, what's the long-term horizon, and are we here to hold asset? And we're not, you know, obviously I'm talking on behalf of LaSalle, but we're not traders. We're here to, you know, to hold the asset, to generate value, but also, you know, do the right thing for the community, for the tenants. And, you know, as investors, we're subject to so much scrutiny by the regulation, by the investors, by the occupiers. So we have to deliver this. And I think the answer is yes, I think we're holding our assets. We're a bit more sophisticated in the way we consider the whole business plan of assets.
Mm-hmm. I want to get on to talking about specifics about what operators and developers and so on can do to attract ESG investment. But are we getting near the stage where the term ESG fund will become redundant? They won't be apart from other funds, and all institutional investing will have, you know, a strong ESG element. It will be a given.
I think that if you ask me 10 years again, sorry, I referred to 10 years, I think it's quite a good milestone. 10 years ago, I'd say, well, there are ESG funds, you know, I don't want to really be a politician or answer and give you examples, but Bridges Ventures, you know, they're very much focused on sustainable, you know, investments. But I think now, you know, everyone talks about the impact, you know, and I think ESG is almost a given, as you say. It's like, I don't question my investments from ESG. I mean, it's like I have to do it, you know, it's as I said, it's embedded in how we consider the asset. And again, it's how we also as managers address the ESG. But I think absolutely, it's like you know, Patchy said, you know, you quoted a few investors before earlier. I think it's like I don't know, you said it's given. It's, you know, you don't question this. I think now we have to look further into, you know, the net zero carbon, you know, the social value. I think that's the next stage of ESG. Yeah.
Thanks, Natalia. Okay, so I want to start by looking at operations of buildings, and then we'll go on to look at sort of development and construction. We'll split the session along those lines. So Susan, can you start by telling us a bit about your recent pledge from RBH about the way you were going to operate your properties, what it involves, and why you've introduced it now?
Yep, absolutely. So we, in April, launched our Giving Something Back program across all of our portfolio. A lot of the content of it is already firmly embedded within RBH, and what we have found, I've been here for 10 years as well, so over those 10 years I've worked hard, and we've worked hard to really ensure that this company is a socially responsible company, and from all kind of aspects. So we've put lots of things in place to focus on our people, our employees, obviously, looking after health and well-being, and making sure that we embed that focus into our culture. We've looked at how we've looked at diversity and inclusion. We've looked at various initiatives around eradicating modern slavery, and all of that work is ongoing, but has been around for the majority of those 10 years. We've also looked at how to work better within our communities, because we cross the whole of the UK. We also cross brands. We are brand agnostic, so work with all of the big hotel brands, as well as having some independent hotels. And although each of the big brands puts a lot of work into what they want to do with the communities and with their people and the environmental work, one size doesn't fit all for us. So looking at from a community perspective, how we get messages out there through schools and colleges around careers in hospitality, around hospitality being a great place to work, about around working in partnership with various charities, making sure that we support locally in each of our various locations, and then a lot of work obviously from an environmental point of view to target various areas in hotels. So a lot of it, as I say, has been kind of coming together throughout the 10 years, and really the focus was around making sure that we were a socially responsible company. We were doing it for the right reasons, if you like, rather than for the because people would invest in us more. We weren't, the reason was not around promoting ourselves to investors and kind of look at us. However, what we had been fairly rubbish at really for those 10 years is actually telling people outside of our little world what we're doing and what we've already achieved and what we plan to achieve within the next 5 years, and actually why we are different from some of our competitors. And I know you mentioned earlier, George, that all of the big brands, all of the big hotel brands, they have comprehensive CSR policies, ESG. They have very, they've done lots of work for lots of years, and they have websites that shout about it. A lot of the third-party management companies, I know for a fact, are doing a lot of good stuff like we have been, but not a single one of them has it on their website. None of them have pulled it together into a program. So really we decided we wanted to make sure that we were telling people what we were doing, and that we were setting those targets and showing people what we've already achieved and what we still carry on intending to achieve. So yeah, that's why we pulled the program together, and we launched it in April with a 5-year timeline.
Do you think when you're tendering for a management contract, for example, that owners and investors are more likely to choose you as you've kind of formalized this than the other companies you say who haven't done that? Is it an advantage that way?
Well, I think it's becoming more so, and I think anything that can differentiate you from your competitors has to be a positive step. And if it's something that I think individually, a lot of people believe in this, all of these kind of things, ESG areas, for the right reasons, and other people kind of agree with them because it gives a competitive advantage, which in my opinion is not the right reason, but it is still a good reason.
You'll take it.
Yes, absolutely. Over probably the recent years, maybe the past 2 or 3 years, ignoring COVID, obviously, it has now become more of a question, and it is from a large investment fund. We will be asked for information. From Joe Public, who is looking to invest in something for his children's pension, it tends to depend on the individual. But yes, we definitely do believe that having done a lot of work on it and making sure that it's embedded in our culture and it's really key to who we are, we want to shout about it so that an investment fund or any kind of investor does choose us because they see the difference and know that we have this as a huge focus.
Yeah. And just quickly, it's something of an aside, but you mentioned Joe Public. Is there demand from Joe Public, the guest, for these kind of measures? Are they interested? Are they concerned in this?
Yes, they are. Joe Public, the guest, and Joe Public, the employee. Both are definitely interested in this. Hotel guests are absolutely. There are a number of brands now that are very green brands, and we're working with one of the big hotel brands on a zero carbon new build framework for moving forward. So that's something that the guest wants, and they will. We have tended to find that they will be prepared to pay a little more, obviously, not massive amounts, but they will pay a premium to come to a hotel that can tell them all about the green, certainly green things, rather than the social and governance, but certainly the environmental stuff is very high up there. From an employee perspective, it's huge. Especially as certainly in hotels, we have a very transient workforce. We're looking at the next generation, and this is absolutely massive factor for who they want to work for. Yeah,
thanks, Susan. Natalia, I saw your virtual hand briefly there, but it's not there. Did you still want to come in on that?
Do you mind? I actually want to ask a question to Susan. How early in the process, when you have invested, putting you on board, of operating the asset, how early in the process of design do you come in, and where you can advise on what needs to be done on site? Because at the end of the day, you're going to manage it, so it's for your operational efficiencies. But how did you come in?
Quite in the design of a hotel. Yeah. We can take on we often take on hotels that are already trading and have changed hands for whatever reasons, and may have changed brands as part of that, or gone from branded to unbranded. That's one challenge. But within RBH, and this is something that differentiates us from our competitors, we also do build hotels as well. So from that perspective, we will be working with the architects and the investors. We'll be identifying sites. If we've got an investment partner, we will be looking at, so we'll be right from the word go. And from an ESG perspective, especially from an environmental perspective, it's much easier to put things in place if you're starting with a fresh sheet of paper than taking on an already existing trading building, which will come with warts and all, and then you have to influence people and find lots of money to make changes. So, but yes, we would be in the new build world. We'd be right there from the start.
Thanks, Susan. I want to come on to construction shortly, but while we're still on the operations side, Zoe, could you perhaps talk to us about the importance of diversity and inclusivity in the workforce, and how the industry is faring in that respect, and maybe what the attitude from the investment community to that is, and how it's changing?
So, okay, well, lots of questions. I'll start with starting with the first, in terms of how well has the industry been doing. I mean, the blunt answer to that has been, until relatively recently, not so well, which is why organisations such as Part W, Black Females in Architecture, Muslim Women in Architecture, Women in Construction have set up, because because there's a need, and because the industry hasn't really been taking that as seriously as we believe it should be, really in depth. So I think the fact that many of these organisations have been established in a way kind of, sort of answers that question. I think there's, but there is now, right now, this kind of vast desire to shift the dial on that. And there's I think there's really, in many ways, there's a positive race to be an organisation which is, being not just being seen to, but genuinely making deep change. I think that point about kind of the sort of the deeper change, I think one of the issues, and this is kind of an umbrella comment, overarchingly, is we've all heard the term greenwash, and I think there is inevitably, when you have a knee-jerk response, you have people racing to develop strategies or protocol that isn't really deeply thought through or doesn't really engage kind of the next level down, and that, I think, so just as a kind of a second answer to your question, George, on how well is the industry doing, I think there's right now a kind of an explosion of interest in this area in terms of thinking really intersectionally, really thinking about diverse issues. But because this is something that, deeply equitable forms of design and forms of practice and methods of developing projects and delivering projects hasn't been invested in, hasn't been considered as deeply important for a long time, there's now a scramble to make change, and I think therein there's a risk of making mistakes. I think one of the things that then is really, really important is really engaging, kind of proper engagement with the issue, which means both top down and bottom up. And something that we certainly feel is very important is that making change within companies is that only really sticks if those who are in the positions, the directorial high-level positions, are really committed to this, alongside as well putting in place and supporting EDI groups, internal groups who can kind of think about these issues, because you can only get so much change from from bottom up, and so there's it's really important for senior management to be sort of taking these issues quite seriously. I think then, what, just to go on to say, what kinds of within companies, which was your question, George, within companies, what are the sorts of things that might mean around, if we're talking about ways of working within the sector, that's about thinking, really thinking about what your team, your own team, your own staff and your collaborators need in going right the way through in terms of equal, having really, really good equal pay policies, ending pregnancy and maternity discrimination, having positive flexible working patterns, having both encouraging a diverse and intersectional next generation into companies, and then retaining them, because retention is a real issue. We see this certainly within architecture. We have actually just over 50% of women qualifying week on week, registering with the Architects Registration Board. But yet, if you look at how many architects are in the industry, it's 28%. So that's a big drop happening, year on year. And I think that, that's then the case, in other areas as well, engineering and so on. Now, just to finish, why is that important? If you only have, and I think probably everyone on the call probably knows this, but if we only have a certain sector of society, a certain social echelon making decisions about the places which we all inhabit, then we end up with places and spaces which only suit a certain band of people. So we need to have built spaces, hotels, leisure centres, housing that is really going to work for everybody. We have to have diverse voices around the table making those decisions, making the decisions about the writing the brief, the expenditure, the kind of the value systems that then gets built into a project. And so there's lots of work. There are some good things happening, but there's lots more to do within the industry to really make deep change.
Thanks, Zoe. So let's stick with development and construction for a moment. I think, as has been mentioned, the kind of energy efficiency and sustainable piece is well established now and almost a given, especially in new construction. But Ben, there's a new focus on healthy buildings and wellness, and that is attracting investor interest now. Can you tell us a bit about that?
Yeah, absolutely. I think it's interesting that a couple of people today, both Natalia and Susan, picked up on the fact that kind of the environmental side of things is being very well covered now, and certainly something we're seeing when we get developers or funders coming to us, and it's particularly the sort of people that approach us at Ekkist are, they want their buildings to be the best of the best, and if they're doing that, it's kind of a given that they're going to be very, very sustainable anyway. Like, they're going to have to be BREEAM outstanding, and as both those other speakers pointed out, if that environmental stuff is pretty much embedded into everyone's policy now anyway. Where we are lagging behind, again, as Natalia and Susan both pointed out, is the social side of things. And again, to go back to that Rachel Gutter quote, the two are so inextricably linked. If we have to take care of people as well as taking care of the planet, and there's huge crossovers between, if you look at BREEAM and the WELL standard. But what we're seeing is, a lot of investors realize that, kind of to go back to Susan's points, that there's a massive commercial advantage there. Obviously, for me, the reason I got into this area was my own issues with my mental health when I was in my 20s, and that kind of made me realize that this is something we have to do. There's a really strong ethical case for us to do this. Unfortunately, not everyone is in it for the ethical reasons, as Susan pointed out. A lot of people are there for the commercial reasons, but we have a lot of facts, figures, and data to support the case now that if you create healthier buildings, they will command higher price premiums. Lots of stats around, actually Oliver Heath, who does a lot of work on biophilic design. He's got tons and tons of data on his website about if you put nature or water into hotel lobbies, for example, even views of nature and water, people will spend more time in those spaces. They will spend more money in those spaces. And again, as Susan mentioned, it's not just about guests. It's about creating buildings that are healthier for the employees too. And that's a big part of what we focus on. So making sure that we're designing, and in the design of the buildings and in the operation of buildings, that we're making sure that the people who work there are looked after, because actually the guests might only be there for a night or a couple of days, whereas the employees are probably going to be there for 300 plus days a year. So it really is vital. And for me, it's fantastic that this is being recognized now. And the S part of the ESG is definitely coming through. I think it has come off the back of consumer demand to a large extent. If we look at other sectors, we look at whether it's places like Brewdog, companies like Brewdog, companies like Patagonia, who they've realized if they really focus on the environmental and social sides of what they do, then actually consumers really care about this stuff. And I definitely think it's being driven from the younger generations coming through. Even, I'm 33 now, but the generation below mine, the Greta Thunberg generation, is really driving this on. And I think if a lot of investors are starting to get really concerned if they don't create buildings that are not just good for the planet, but they're good for the people that use them too. Actually, it's a question of future-proofing. They're at real risk of being left behind. And the last thing anyone wants is kind of outdated building stock that, 10 years, 15 years down the line, not just does nobody want to stay in that hotel or use that hospitality building, but actually nobody wants to work there because they realize that there's other places they could stay or other places they could work that would be much, much better for both their physical health and their mental health.
Thanks, Ben. Can you just give us a few pointers of the kind of initiatives that developers are putting in buildings, specifically from a wellness point of view, that obviously some of them will overlap with the sustainability measures, but what are sort of 4 or 5 key things that they're doing that perhaps they weren't 10 years ago?
So the biggest thing we've seen is the rise of the WELL building standard. And it's worth saying, actually, so RBH Hospitality, massive global hotel management company, they've actually recently partnered with the IWBI, the International WELL Building Institute behind WELL. And we are seeing lots of our clients across a wide range of sectors starting to pursue WELL. So WELL covers kind of 10 concepts, which I won't go into, but it's really, I would say it's less about what's the key features or the key add-ons. It's about a design philosophy more than anything else, and an operations philosophy. So having that very human-centric approach, thinking about everything from, you know, the air quality, the water quality, what materials are we putting into buildings? This is something that we weren't talking about 5 or 10 years ago. Like, are they going to off-gas nasty, what we call volatile organic compounds into the air, which again, like, people weren't measuring these 5 or 10 years ago. And now all of a sudden people have realized that actually the type of flooring or the type of insulation we can put into a building can have a huge negative impact on its air quality. You know, things like the supply chain as well. How ethical is the supply chain? So that's a big part of, well, where are your materials coming from? Is it not just sustainable, but is it ethical? And are people getting harmed in the making of these products? Right through to the mind concept, which is I'm involved with the advising the mind board. That's basically how can we create buildings that are healthier, better for people's mental health. And that can be all kinds of things from, you know, spatial design, how high are ceilings, how small and cramped hotel rooms feel, you know, how much storage do we give people, how adaptable are they, right through to, you know, those kind of HR policies. Are we looking after staff properly? Do we have trained mental health first aiders? So it does cover a huge gamut of stuff. And much like you can't just put a few solar panels or a wind turbine on the roof of a building and say it's a sustainable building. You can't just put out a fruit bowl in reception or whatever it might be and say that we've got a really, really healthy building. It's about a philosophy. And the important message that I suppose I'd like people to take away from this is that it doesn't have to cost a fortune. Like, the earlier you can get involved in that process, and again, with what Susan was saying, like, it's easier with a blank canvas. If you start thinking about a healthy building from the outset, just like a sustainable building, you can embed it into the way you lay a building out and the way that the whole building is designed and the whole philosophy of that design team. So actually, that if you get thinking about it much earlier, it actually can be much more cost efficient, and that'd be kind of my recommendation.
Thanks, Ben. Natalia, Ben mentioned BREEAM and WELL, and we've also got LEED and things like this. How useful are certifications to you when making investment decisions?
George, you're reading my mind. I was actually about to raise a hand and ask that question of Ben, because it is actually an ongoing debate internally within the team. You know, what do we actually truly need? Is that fit well, BREEAM? You know, what does that actually deliver? Because we all understand, as I said before, you know, there are regulations, there are our standards, our frameworks, but what do actually end users require, need? Is that going to just improve my liquidity of the asset? You know, is that going to make me, you know, look good amongst my competitors and peers? Or is that truly what my tenants will value as the landlord, providing with the best tools? And what does that actually mean? I think, yes, there will be expectations like BREEAM, absolutely. EPCs, not below E, you know, post, you know, there's regulations coming, you know, all over the place. Then also we all have benchmarks and various other standards that we sign up to, you know, the building better partnerships and the rest. But from accreditation and sort of certification perspective, I think it's ongoing. And I don't have a clear answer, because we're still trying to figure out what is the right message to the tenants. Because I want to do, you know, I'm very much with Ben, and Ben talks exactly the things that I'm very much talking daily about: social value, community engagement. We call it placemaking. You know, the LNGs of this world do really well, you know, providing that community engagement. You know, we're trying to do it on our sites from well-being, mental health perspective, our students, you know, BTR residents. So, but I think it's that certification that is still a big question. And I think that the industry doesn't have a clear answer. Obviously, there's US model of coming in here, but what is the UK like? What do we actually truly need? I think it's a big question for me.
And you mentioned earlier that data drives a lot of your ESG decisions, but it seems to me that a lot of this stuff is very hard to quantify, you know, especially in terms of the well-being of people in buildings and that kind of stuff. So what kind of data are you using and able to use, and what data are you not getting that you would like to get that would help?
Environmental data is easier to quantify, so we do work with hope to claim the best-in-class consultants, advisors that will help us to use the data to provide efficient sort of outcomes for us to make the investment decisions and hold decisions on the asset. But I think it's, we do a lot of questionnaires, we do talk to our residents, I don't think that's easy quantifiable. It's that qualitative input from tenants. So I think actually we could sort of be becoming very hands-on in how we get engaged with the tenants, and sort of what initiatives we're running on site, and what feedback of these initiatives are. But yes, absolutely, I think it's really hard to get that S thing through. I think it's clearly there is such a big outcome to this community and society, from collaboration, improving the nearby, we try to get our tenants engaged with the local community as well, with charities, we're very much helping them to be, to be interactive.
Yeah, thanks, Natalia. Ben, did you want to come in on the certification piece, and then Zoe, I'll come to you.
Yeah, or both. Certification, again, from what we're seeing and the trends we're seeing, WELL is going to be the big one. We believe we kind of, that's the horse we've chosen to back.
Quite expensive one, Ben.
It is, but again, it's about long-term value, and I suppose this comes onto the data. It can be expensive. We tend to see cost uplift somewhere between around 1% and 3% in terms of build costs. But again, if you're then saying over the life of a whole building, like what's the impact, it can be huge. And coming on to kind of measuring data, at the moment, the majority of data is coming out of like more commercial buildings, because that's where WELL has been completed. But when we see kind of healthier buildings occurring, like it's really important to say like how damaging to the economy and how damaging to businesses like poor physical and mental health is. So just if we look at mental health alone, like poor mental health of employees costs UK employers 30 billion a year, and this is through kind of like lost productivity, absences, and recruitment costs. But yeah, if you just put in place like a small workplace wellbeing program, you can see productivity boosts of between 20 and 60 minutes a day per member of staff. So you talk about the cost, like actually, yes, it may cost you slightly more in terms of the initial outlay, but over the 40, 50-year life of a building, the potential benefits of that are absolutely enormous. And we can do things like fit well, absolutely. It's there are options that are available, and within residential, you've got things like the home quality mark. But the reason that WELL is kind of the most costly to achieve is because it is the most comprehensive. It's the most, like, if you're going to go, I'm a real believer, if you're going to do something, do it properly. We've talked about greenwashing, and you shouldn't just be kind of doing this stuff to make it a tick box and say we've done some well-being. Like, it really, if you're going to do it thoroughly. And I would make the argument that WELL is the most sort of thorough and holistic one out there.
Thanks, Ben. Zoe, did you want to come in on that point?
Yeah, so I think something that I suppose I just wanted to add, and it picks up on Natalia saying that actually, there's all these different kind of kite marks and these different charters that you can sort of sign up for, but we don't know exactly which is the right one. And I think that's simultaneously frustrating, but it's also an opportunity. I think there needs to be an awareness that yes, we are continuing to learn, in the same way, as a kind of a metaphor. 20 years ago, everyone was being told to buy diesel cars, right? And now everyone's being told to buy electric. That is the nature, that's the nature of change. And yes, it is expensive, but I completely agree with Ben about the longer, bigger kinds of value. And all of us can present all sorts of statistics and reports that back that up. I think what is really important is the value of R&D, and we really need organisations to be seeing the benefit of undertaking more research and post-occupancy studies themselves. That has always been post-occupancy has been something that we've all been, as an industry, we've kind of been talking about for ages, and yet no one's really been that interested in it, because I think partly because architects have found it difficult to be able to prove the economic value of it. But I think exactly as Ben has been saying, the economic value is and Susan and Natalia is now very much there. I think where we have an opportunity is to be bringing in the opportunity of tech. We haven't really touched on smart cities, but rather than waiting 20 years to find out that maybe diesel isn't quite the right way to be going. The new sort of technologies that we have now in terms of sensors, in terms of feedback that customers and clients are able to give us, we can make those changes much faster. And I think that's really, that the opportunity of technology, what we can learn about our spaces and learn fast and be able to make those adjustments, I think that's, that presents an opportunity for the whole industry to start learning and making change. That means that we then need to be willing to be a little bit more flexible and not be saying this is the way and we're going to stick to it, for the next 50 years, and be open to change and actually embracing change.
Yeah, thanks, Zoe. Susan, did you want to come in there?
Yes. Sorry, just coming off mute there. I just wanted to come back to the point that Ben was making there around mental health challenges and things. And certainly the past 12 months, 14 months have been hugely challenging for a lot of people from a mental health perspective. And I think that a lot of good companies have really made sure that that has been a focus for the past year. It probably was anyway, but it's really been amplified over the past year of how important that has been, and making sure that the well-being of the employees and the clients has been really at the top of the agenda. And I do think moving forward that will support Zoe's chat earlier around that diversity, because one of the biggest things that's had an impact on positively improving people's mental health over the past year, and is ongoing with the ongoing furlough support, is that flexibility in how people work today and how people use our spaces, whether those are offices or hotels in our case, because the spaces are being used in a different way. They're being used just because I need an escape from the four walls of my house sometimes, or I need to talk to somebody that's not in my immediate family or not on a screen, and that increased flexibility will on an ongoing basis have a beneficial impact on people's mental health, and will also attract, I believe, more senior female employees, because if the flexibility wasn't there in the previous world, that was a contributory factor of why a lot of women wouldn't come back or come into those specific roles. So it was just really to kind of re-emphasize the importance of that in this, driving that social part of ESG is coming out of COVID gives us a huge opportunity to really focus on that area.
Mm-hmm. Thanks, Susan. Yeah, that's, every cloud has a silver lining, I guess. And the changing world of work is another topic altogether, but it is a fascinating one. It's certainly.
Yeah, just to second that, since COVID has been unfortunately around whatever we're up to now, 14, 15 months, I've seen the dialogue really shift on that. My background is about really from focusing on designing for mental health, and it's something that people weren't necessarily that prepared to engage with 2-3 years ago. But everyone has been through that challenge over the last year. Everyone's realised the role that our homes and the spaces around us play in relation to our mental health. So it's been a conversation I found has actually been much easier to have as COVID has gone on.
Thanks, Ben. Changing tack slightly. Natalia, we've mainly been talking about institutional investment into big projects and existing businesses and buildings and so on. What about the world of the startup and the PE investor, the seed funding and stuff? Is having an ESG policy essential for a new company to get funding?
I think it's definitely expected. Forgive me if any audience disagree with me, but I think it's exactly what I said. I wouldn't even differentiate whether you are startup or PE or whatever you are. I think it's almost expected that and I think those startups these days in prop tech are I think they understand the world has changed. You know, there's more awareness. I think most startups and prop techs that I'm seeing are very much the ESG, sustainability, you know, diversity, inclusion, all of this, equity, it's all within their mentality and their mindset. So it's almost, I haven't seen anyone who would completely be skeptical about or will disregard ESG. And so I think that's already in there, or at least those that I've been seeing. Probably I'm seeing good ones, I don't know, you tell me. But so I think it's expected, absolutely. Again, I'll go back to what I said before, it's there already.
Yeah.
I mean, sorry, for startup it's easier, but for when it comes to developers, when it comes to house builders, other, you know, partners that we work with, it's harder sometimes to convince them because it's all down to the margins and down to profit levels. But it's very much, you know, we are challenging them, you know, and it's hard to find developers we can be aligned, but they're there, absolutely. Sorry, I moved your question a bit.
No, that's okay. Ben, go ahead.
I just wanted to ask Natalia, how much do you think that's due to maybe the type of business, but also, I suppose, to link back up with Zoe's points, how much do you think that's down to kind of the makeup of, like, you know, who's running those businesses as well? Like, if you contrast typical person that's running a young startup to, you know, some of the boards of those larger developers, do you think that plays a role?
Absolutely, from the executive team up to the board, you know, non-execs. I think more and more boards these days understand. I think it's almost not just the regulation aspects as well. I keep talking about this, but I think it's so important, well regulated. But it's also their understanding what they're seeing, what's evolving around them, and where the world is going. So you can't ignore this. It will sort of relate to these things, you know, on a personal level. At least I can certainly say I am within my community, at least, and things that I'm doing on charitable level. So yeah, absolutely. I think it's down to, I think more and more people are very forward. They have to be very proactive, forward-looking, forward-thinking. So I think those companies will do well, and I think it's everywhere. It's a board level and executives. Just almost want to have those people, you know, working with you. Did I answer that, Ben? Sort of.
Yeah, thank you.
We've just got one question coming from the audience for you, Natalia, from Toby Druitt, who asks, excuse me, I'm going to put my glasses on to read this. Are investment decisions being made based on ESG data at the asset level, or is this organisational?
So I should probably just clarify. So I come from a private equity side. So I'm sitting here with my private equity hat on, and I'm thinking, well, of course there is a business level decisions and agendas and frameworks, but it's very much, you know, we look at asset level. You know, we are very clear about what we want to get from an asset, but at the same time, we want to make sure that our partners, as I keep saying it, it's like non-stop, you know, very much with us on the journey of what we're trying to get to. And we educate them, you know, we do come in, and I spoke to George about earlier, you know, we have some developers where we spend months and months talking to them about why it's so important for us as a final sort of investor, then holding the asset, why it's important to talk about this and deal with it now during design delivery stage, and also supply contractors, materials, all those things we're talking about, the whole supply chain. So yes. Both,
yeah.
Both, yeah.
Okay, thanks everybody. We've got to 3 o'clock already. That's gone past in the blink of an eye, as these discussions tend to do when everybody's getting involved. Just going to show a couple of slides quickly before we sign off. The next 2 sessions in this urban living series will be having a real in-depth look, first at the senior living sector on June the 2nd, and then at co-living on June the 16th. The details to sign up to those sessions are in the chat. And as I mentioned, all these webinars are a run up to the Urban Living Festival, which is taking place at Tobacco Dock on July the 7th and the 8th. And we're really looking forward to seeing loads of you there in person. I can't wait, frankly. It's been far too long. Details again in the chat. We've got lots of fantastic companies on board with the event, sponsors, media partners, and we're really looking forward to networking with them. If you'd like to get involved, please contact my colleague Katie, whose details are on the screen and also in the chat, I believe. We're across all the social media platforms, so do get involved. We're quite active on those channels. It'd be good to see you there. thanks to everyone for watching. Thanks ever so much to Natalia, to Zoe, to Susan and to Ben for their time and their expertise today. It's much appreciated, guys. Thank you. We're going to leave the session open for a couple of minutes, just so you can take in all the info in the chat if you want to take any of that away. I'll hopefully see lots of you in London in July, or perhaps on a webinar before that. But thanks very much, everybody. Have a good rest of your day.